With all of this happening, there's a new poll out from Gallup showing that President Trump's handling of the economy has ticked up to a new high, 53%. Charlie Gasparino's here on that and more. And sometimes we talk about forward-looking indicators and backward-looking indicators.
Yeah, I know. It's kind of interesting in the middle of a market sell-off that people are giving them credit now. Listen, the economy's better.
Yep.
It has to be sustainable better. And I think one of the problems that the market's sort of highlighting is that, listen, you had a corporate tax cut in December. If you look at the market, the Dow, from about the time of the corporate tax cut to now, it's been up and down, but it's essentially flat.
Right.
Why is that? Well, I think trade was the initial fear, that a trade war priced into the market slows down the economy, slows down corporate earnings, bad for stocks. Now it's not just trade, but it's interest rates. And it's one other thing which adds on to interest rates. Does the corporate tax cut provide the bang for the buck that we need in terms of GDP growth, so we don't have massive deficits? So
is the answer no to that? Because
well, it's a debate in the market.
Yeah.
I mean, I don't know. 3.5% growth, if it's sustainable, is pretty good. That helps. Mick Mulvaney will tell you, because I've heard him say this, that will help. He's the budget director. That would help pay down the deficit. It would stop the deficits from gapping out wide, and because you provide economic growth, earnings growth, tax growth, that basically puts a stop on how many bonds we have to sell to plug the deficit.
Right.
Thus, if you sell less supply, prices go down. Prices go up, interest rates go down.
Interest rates go down. It's like a debate between Goldman Sachs and the White House on all of this, because Varney had Larry Kudlow on earlier, and he was asking him about the Goldman report, which was fairly gloomy. But one of the big points, as we talked earlier about, was that Goldman is basically saying if those tariffs go from 10% to 25%, that's trouble. And they said there's like I think a 30% risk of their downside scenario, which would be kind of S&P 500 end of next year, 2,500, basically down from where it is now.
First off, Goldman Sachs' economic department
is not the...
is Juan Hatzius, I think his name is, runs
right.
it. They're very Keynesian. They're not supply side, so they don't buy the...
well, Kudlow called it a partisan forecast.
Yeah, but they are a very Keynesian group over there. Juan Hatzius is known to be that way. And, along the lines of Wall Street rating agencies, they don't believe tax cuts actually work. So... You got to factor that into the equation. The real question is, was the corporate tax cut the way to go, as opposed to a bigger individual tax cut? And I actually don't like the fact that they did a massive corporate tax cut, and they actually raised taxes for people in certain states because of the SALT deduction being all but eliminated.
I want to talk about politics in a second, but one quick question I want Danielle DiMartino brought up a moment ago, which is issues in the credit market.
Who's she now?
She was just a former Fed official who was just on with us a few minutes ago, that issues in the credit market, high yield and kind of stress in credit. Are you hearing a lot of that from people you talk to?
We hear that in corporate bond. I mean, listen, GE, for example, is rated a couple notches above junk, but its bonds are trading like junk. So there is a sort of worry in the market about supply and the fact that corporations are overly indebted.
Yeah.
Therefore, can they pay it back? And, you remember, when you have interest rates this low, and this is something to be key on. I know that Trump likes low interest rates, and every president does, by the way. When interest rates are so low, it encourages corporations and people to go out on the risk spectrum and buy bonds, and corporations to issue bonds. So, think about it. Netflix, under a normal circumstance, should they be able to sell this much debt, go into this much debt without a profit? I mean, it creates bubbles and changes financial incentives.
Yeah.
So that is something to worry about.
Yeah, she's looking at these BBB rated bonds right above high yield. All right, I said I want to talk about politics. We've talked a lot recently about Maxine Waters as the chair of the Financial Services Committee. What's new there?
Well, some of the stuff I'm picking up is what her agenda is going to be. A lot of people say she wants diversity throughout the financial markets. I think, from what I hear from my Capitol Hill sources, she's going to focus on board of director diversity. That's something that she is going to look at. Now, whether she holds hearings or whatever, nobody knows. But that is the sort of sense coming out of from her people, at least translated to people on the ground, that board of director diversity, particularly in the areas where she will, I guess, monitor.
So new rules, new requirements, new...
I don't think she could do anything but call people to the carpet.
Okay.
She's going to be, from what I understand, focused. She looks for a constructive relationship, generally with banks. And if you see in the past, she hasn't been, when she was like in leadership positions, not leadership, but in the majority in the past, she wasn't like, she wasn't a bomb thrower when it came to, you know, all the big banks. I mean,
so these stories that are making it out to be like, hey, she's really going to hammer these banks. A, she doesn't have the authority to do it, and B,
she doesn't. But I think she's going to be more focused. And the names again that keep coming up. And I said this to Neil last week. I said it on Charles's. Charles was hosting Your World yesterday. Wells Fargo, because it's a local bank who she believes does not give back to the community, particularly her community, South Central LA. And they have a lot of scandals that they have to deal with. And Deutsche Bank.
Trump's bank.
Trump's bank. And when she talks about the globe, you know, I'm looking at foreign influence and money laundering. She's really talking about, does Deutsche Bank, was it funneling money, Russian money, to the Trump properties, and was that a money laundering exercise? I'm not saying it is, but that's the code.
To her, that's what it's all about.
And that's what I hear she's going to look at. Now, she may get diverted. Who knows? But that is what the agenda is from what she's signaling right now, at least my sources on Capitol Hill and in the financial industry are saying.
All right. Thanks, as always, Charlie. We'll talk to you again.